Hey everyone, it's Casey Shine. I'm actually out here in Utah right now, which is why I don't have my normal studio background that you're used to seeing. I was supposed to leave to go back to California today, but I'll probably end up being here for a few more weeks because of this whole coronavirus health pandemic we're all in the middle of right now. I hope all of you are being safe and healthy and protected, but most importantly, making smart, responsible choices during this time. Listen, I know that the world economy looks like it is just falling apart right now. The stock market is down almost 30% compared to 3 to 4 weeks ago. People are unemployed, businesses are closed, everybody is stuck at home. And, the big question is, what does this mean for real estate? And that's what I want to talk about today. I will tell you this, the market is changing day by day, hour by hour right now. For all we know, we could wake up in the morning and the market could be different. Things are changing so quickly right now. Now, I did make a 2020 recession video back in December before this whole outbreak took place. And I still do believe we are headed for a recession. It might already be here, actually. Goldman Sachs thinks so. But the housing market is still going to be okay. And I'll explain why throughout this video. A huge reason is because the fundamentals of the real estate industry are very strong right now. Regardless of everything that's going on. We are going to be seeing a softening in the market, especially in the luxury end, where a big portion of the wealth that drives that sector is connected to the performance of the stock market and financial markets. The other aspect of the housing market that's going to be affected is the Airbnb side of the business. Pretty much because all of travel has been put to a halt, right? But let's make something very clear. Recession does not mean housing crisis. It's easy to think otherwise because we all think about the most recent recession we just had, which was the housing crisis, right? That was the mortgage meltdown. That will not happen during this time because it's completely different causes for this recession. Did you actually know in 3 of the last 5 recessions in the country, home prices actually appreciated and went up? Now, why does that happen? That's because when the stock market, when there's turbulence in the financial markets, real estate is looked at as a safe haven for people, investors to park their money, so the demand goes up. Here's why this recession won't be anything like the 2008 recession. This recession isn't going to be caused by problems within the real estate industry. Bottom line. As a matter of fact, the Wells Fargo Investment Institute says they don't expect a repeat of the severe 2008 recession because the virus and oil shocks are not endemic to the financial system, but are rather external. Think of it like this. Imagine that a housing tract, a neighborhood, represents the global economy. And imagine that all the construction for those homes was done with very poor construction quality. If an earthquake were to happen, everybody's in trouble. Those houses, they're coming down, right? That was the case in 2008. The fundamentals of real estate were not strong. It was not structurally sound. Complete opposite today. Today, it's a completely different story. If an earthquake were to happen, because the fundamentals are so strong, the foundation is so good, we're not going to have such a huge impact. Now, if we are to compare this recession to another one, this is a lot more like the 2001 recession, which was caused by the dot-com bubble and 9/11. Here's what David Rosenberg, a chief economist, says about it. What 9/11 has in common with what's happening today is this shock is sparking the same type of fear and anxiety amongst the general public, but for different reasons. People avoided crowds back then because they were afraid of another terrorist attack happening, whereas today they're afraid of getting sick. But the same parts of the economy are under pressure: airlines, leisure, hospitality, restaurants, entertainment. Let's look at what happened with home prices back then. You'll notice the stock market dropped about 45%, but home prices appreciated significantly, 6.6% to 8.6%. This is more proof that real estate is looked at as a safe haven when the stock market is volatile. Now, earlier I did say that the fundamentals of real estate are very strong right now. So what are those fundamentals? Well, if we just talk supply and demand, right? Buyer demand is extremely high right now. And the reason why is because wages are up, credit scores are at an all-time high, you got equity that's at an all-time high, and interest rates are historically low. This is the lowest interest rates have been in about 50 to 60 years. On the supply side, we have a huge shortage of inventory. And that alone is a huge reason why prices are going to continue rising. On top of that, lending standards are still very tight compared to the pre-2008 crisis. And that's resulted in one of our lowest default and foreclosure rates in about 20 years. Now, what about interest rates? What's going on with the interest rates? It's kind of wacky right now. Yes, we are at a historical low point, but let's look at the 30-year fixed rate mortgage rate. So back a year and a half, 2 years ago, we were at about 4.5%. Then at the beginning of this month, we hit an all-time low at 3.29%. This happened because of the coronavirus and the impact it was having on the markets. So what happened? Lenders got so much business from people wanting to refinance, people wanting to buy homes. They didn't have the capacity to handle all that business. So what's one way that you make your product less appealing? You raise the interest rates. So that way they could actually handle the amount of business that they had just come rushing in. So yes, the interest rates went up a little bit, but regardless, it's still at one of its lowest points in 50 to 60 years. If you bought a house today, you would still be bragging about your interest rate for the next few decades. So I've had a lot of friends ask me, even though the fundamentals of real estate are strong, how could this become bad for the real estate industry? In my opinion, only if everybody starts defaulting and getting foreclosed on. And I don't think that's going to happen. There's a few reasons why. Number one, a lot of people that are not physically going into work anymore are still getting paid working from home, right? On top of that, there are a lot of relief efforts that have been happening. The FHA, Fannie Mae, Freddie Mac, basically said no foreclosures and evictions for the next 60 days, right? They put a moratorium, which is basically a stop towards those things happening as people are affected by the coronavirus. So a lot of these banks and service providers are learning a lot from the 2008 recession, and they're doing these things proactively to prevent a lot of these defaults and foreclosures and evictions from happening. And then on top of all that, you have the government stimulus package that we should be hopefully seeing in the beginning of April, right? I think they have about $250 billion going towards individuals and $300 billion for small business, something like that. So, with that said, yes, real estate, it has been impacted by this pandemic. I am grateful though that I did have a closing happen and take place last week, and I got 2 more that are in escrow right now that are actually looking very good and things are moving along smoothly. But if you're selling a home, you could expect your days on market to go a little longer than normal. If you're thinking of selling, what I would do right now is I would get everything in order, get all your ducks in a row, start preparing, talk to an agent. That way you could hit the ground running right when everything is lifted and everything is back to normal. For buyers, get your pre-approval now, right? Get all your documents put together, send it to your lenders. If you need a recommended lender, let me know. I could refer you to some very good lenders. That way, once this whole thing is lifted, you could start looking at homes, making offers, and not losing out. With all that said, if the economic impact due to the coronavirus follows the patterns of past public health issues, we are going to see a lot of growth and a huge rebound take place like it always has. This is going to pass and everything's going to be back to normal. People are so deprived of going out right now. This is what's going to happen. Businesses are going to be so overwhelmed with how much business they have, they're going to need to rehire everybody that was laid off because of this pandemic. But regardless, you know what? I will say that there is a silver lining through all this, and I'm a big family man. And I think what this has done is it taught people how to be with family again. It taught people how to interact with each other. It brought people closer to their loved ones, and that's priceless. That is never a bad thing. But anyways, I hope this information was helpful to you. If you did find it helpful, subscribe to my channel, like the video, share it, tag people in it. We want to get the word out there so that way there's not this overwhelming amount of fear of people not knowing what to think or what's going on. Follow me on my Facebook, my Instagram, and YouTube. That way you could be kept up to date as things change. I'm going to be posting a lot of updates on there. But with that said, if you have any questions whatsoever, please do not hesitate to contact me. I am more than happy to answer any questions you have right now about what's going on with real estate. And until then, take care of yourself, wash your hands, stay safe, be protected, and be responsible with your decisions. And I'll see you guys when I see you guys.